So now we will begin with fundamentals of auditing. See, this fundamentals of auditing is not a separate chapter, but it is very, very important for you to understand the auditing subject in a brief manner. So this chapter mainly consists of those elements which are very, very basic for the purpose of starting with the audit and continuing with the audit and ending with the audit. These are the things which are very, very important. If you look at the chapter name, it is chapter 0, it is not even chapter 1 also. So it is fundamentals of auditing. First of all, as you know, so before continuing fundamentals of audits or why we have here, so we will be doing the auditing revision series for all the chapters from starting from today. So we will do maybe today fundamentals plus NOS, maybe tomorrow we will start with, in the second video we will be doing audit report along with the carbon, etc. So first we have to understand what is audit. How do you understand the word audit? Sir, audit is audit. Yes. What is audit? As the definition says, an audit is an independent examination. First word we have to discuss is independent examination. This chapter we will discuss in depth. Independent examination of financial information of any entity. Whether or not profit oriented, irrespective of its size, legal form, when such an examination is conducted with a view to express an opinion thereof. So what is it? If you see, if you look at the definition they are telling, it is an independent examination. So what is independent examination? Any examination done by an independent party to the company. So who is independent party to the company? Who is not dependent on the company is independent party, right? Who is outside person? He is our old best student. Yes, like you wanted to attend one more time class. So first time attend you name the second one. Okay, coming back. It is an independent examination. Independent examination means it is an examination means, as we know, it is a verification, and it is verification by independent party. Independent party means we call it as third party or outsider. So who is an outsider? Anybody who is not connected to the company, either by way of shareholding or by way of related party or by way of any employment or by way of anything. Anybody who is totally independent. Independence means, as we discussed, as we are going to discuss in the next few chapters, it is independence of mind as well as independence of appearance. Both has to be present with respect to independent examination. Yes sir, we understood independent examination means examination or verification of assets and liability, P&L, all those items by a third party. Of what? Of financial information. Financial information means what? See, we have seen the P&L, the balance sheet, cash flow, each and everything. We have seen 5 elements. Is that what they are trying to refer? No, actually financial information means it is not financial statement, it is information. Financial information is like financial statements plus all the supporting documents to support the financial statement element items. That is called as books of accounts. So for books of accounts supporting also we need certain elements, we call it as vouchers. All the items combined together we call it as financial information. As an auditor, I do the verification of financial information, not only the financial statement. Financial information is financial statement, books of accounts as well as the vouchers. Of what? Any entity, whether or not profit oriented. What does that mean? See, I don't care whether you are profit making, I don't care whether you are giving service to some charitable activities, some free education, free hospital, no. Even you are doing that, you need some money to run the institution. So how did you get that money? By way of donations or maybe by way of some other activity also. If it is non-profit organization, then whether you are utilizing that money in an appropriate manner or not, or are you misutilizing? Are you buying some vehicles, building for your own purpose or misutilizing that, or you are applying for the same purpose or not? That is why we have to conduct the audit of the financial statement of any entity, whether or not profit oriented. Profit oriented, so anyway we have to do it, but non-profit organization. When I say whether or not profit oriented, we call it as profit oriented plus non-profit oriented. All the organizations has to be covered here. And they are telling it is irrespective of its size, legal form. They are telling irrespective of its size or legal form. So what is its size? Sir, I am just a small company. Do I also need to do the case? Sir, I am a big company. Do I need to do the audit? Yes, sir. Irrespective of its size, I don't care about size. And or it is a legal form, irrespective of the legal form. So what is irrespective of the legal form? It is either it can be a partnership, or you can be a LLP, or you can be a sole proprietor also, or you can be a company also, or you can be foreign Indian company, any type of company, but you are subjected to the audit depending on some respective thing. When such an examination, that means whatever the independent examination are doing, such an examination is conducted with a view to express an opinion thereon. See, why do I do all these things? I do for the purpose of expression of an opinion. My main purpose of doing audit is giving an opinion. If I don't give an opinion, I don't need to do all those things. That is why we tell that audit is an independent examination. So, okay, what do you mean by opinion? Whenever you see financial statements, books of accounts, mainly are they prepared as per, consider if I take an example, as per schedule 3 or not, and have they considered accounting standard or not, to check whether everything is there or not. Based on that, if they have prepared correctly, I will give my opinion stating that yes, everything is true and fair. That is what my opinion. So they did not follow accounting standard, they just followed schedule 3. Then I tell that it is not true and fair. So that anybody who is connected to the company want to take a decision, they can take decision based on my opinion. So I am not telling people to invest in the company. I am telling people what is there in the company. I am taking, it is like I am a postman. Whatever the information given by the company to, I am just conveying it to the respective users of the financial statements. So this is called as audit. Audit is an independent examination. See, this is very important definition. You have to compulsorily remember that. There is no other option. Audit is an independent examination of financial information of any entity, whether or not profit oriented, irrespective of its size or legal form, when such an examination is conducted with a view of expressing an opinion thereon. Yes, sir, we are understood. Now, the second definition is, second thing which we have to discuss is, what is the objective of the auditor? Sir, why the hell you are doing the audit? Is it because somebody is forcing you to do the audit? Or are you because you like doing audit of some company you are doing it? No. Whenever you are getting appointed for somewhere, you have an objective. Sir, why are you doing the chartered accountancy intermediate? So my objective is to clear it. For every party, for every activity, for every business, for every appointment, there is always an objective. You ask the Prime Minister, why is the Prime Minister? Because he has an objective of developing India. You ask any chief, you take any designation. Every designation is always having an objective. As unlike the same thing, even the audit is also having an objective. The objective are there only made two objectives. The first objective is to express opinions. Or what will express opinion? Here, just now we are seeing to express an opinion on financial statements. If you look at the language, how they twisted it already, they are telling you should do the independent examination of financial information, but they are telling now you should express opinion on the financial statements alone, not the financial information. So then, why they are asking us to see the financial information? Because whenever we are appointed to check the financial statements. How do I check? Whether it is genuine thing or whether it is something misstated. When I have some supporting documents, only I can check whatever it is entered in the financial statements, it is right. I am responsible for financial statements. To check whether financial statements are correct or not, I am verifying financial information, books of accounts, vouchers, and all those things. But whenever I give my audit report, I give only my audit report with respect to financial statements. So what should my report contain? Whenever you are giving an opinion, you should state in the audit report that whether the financial statements are free from material misstatement. We have to check that the financial statements are free from material misstatement or not. So what is material misstatement? We will just see it in some time. And second thing is whether they are prepared as per AFRF. Somebody will write it as RFW framework, they use it as FW last framework. I just use it as AFR directly. What I have to do, the objective of audit or auditor is, I have to express an opinion without fail. I have to compulsorily express opinion because not only the standard, even section 145 of the Companies Act 2013 mandates that every auditor has to compulsorily sign the audit report. For the purpose of signing the audit report, first of all you should express an opinion. That is what we call it as the audit report. So, as per that, as well as this, whenever you are doing the audit of company, that is applicable. If it is partnership LLP, that section is not applicable because Companies Act is applicable only for companies. So, coming back to this also, fundamentals. So, auditor has to compulsorily express an opinion on the financial statements, stating that whether financial statements are free from material misstatement and everything is prepared as per applicable financial reporting framework. Yes, sir, we understood. See, this Question has a chance of being asked in the examination directly for 3 marks. So what is this financial statements are to be free from material misstatement? We have to understand the word misstatement now. What do you mean by the word misstatement? What do you mean by misstatement? Tell me. For understanding that, I have given a separate definition in the material. It is point number 13. Misstatement. If your school miss states something, that is called as misstatement, or college miss. So misstatement means it is a difference between, there is a difference between amount, classification, presentation or disclosure. Amount, classification, presentation or disclosure of a reported financial statement. That means whatever you have reported, the difference between that financial statements with respect to amount, classification, presentation, disclosure item and the amount, classification, presentation or disclosure that is required as per applicable financial reporting framework. It is like what you should be reporting, what you are supposed to report and what you have reported. Any difference between those two things are called as misstatement. Misstatement. So what is a misstatement? Can you highlight it? Yes. You see here. If I use the word misstatement, it is difference between, it is a difference between amount, classification, presentation or disclosure, amount, classification, presentation or disclosure of reported financial statements and amount, classification, presentation or disclosure of applicable financial reporting framework. This is like what you are supposed to do, but what you actually did. The difference between that is actually the misstatement. So, can I give an example? Yes. For example, if you remember, there is a standard called as AS2, Accounting Standard 2, which is the inventory. Inventory tells that whenever you are evaluating the inventory, you should either value what? Cost or NRV, whichever is lower. But what is cost? I am telling, cost is 10 lakh, NRV is 12 lakh rupees. Cost is 10 and NRV is 12. How you should record it in the balance, consider it as a balance sheet, and there is an inventory here. Should you write it as 10 or 12? 10 because lower of the 10 or 12 is 10 only, but you have written it as 12. There is a difference between amount here of what? What you are actually reported, what you are supposed to report. You are supposed to report as only 10 lakh rupees, but you actually reported as 12 lakh rupees. That means the difference between AFRF and difference between actual presented financial statements is called as misstatement. This is with respect to amount. Difference between amount, it can be there in amount also. Consider, even there is one more standard called as AS13. AS13, what is that? Investment. In simple I call it as investment. So what is this investment? Yeah, AS13 says that any investment which is going to mature within 12 months, has to be considered as current investments, and more than 12 months are long-term investments. So as per AS13, investment, any investment which is having a maturity value of maturity term of less than or equal to 12 months, it should be classified as current, but more than 12 is long-term investment. Consider as on the balance sheet date, there is some investment which is having a maturity period of 6 months. When there is a 6 months maturity period, how should I classify that as? That should be classified as current investment only. But when I am drawing my financial statements, balance sheet, I wrote it as long-term investment. That means I wrongly classified. As per AFRF, I should classify that as long-term investment, current investment. But if my reported financial statements, I classify it as long-term investment. There is a difference between classification of AFRF and classification of reported financial statements. And with respect to third example, presentation of disclosure, You remember, whenever the company issues the shares for any consideration other than cash. See, when the shares are issued, see this, whatever I am writing the balance, format balance sheet, it is not applicable for companies. For company, schedule 3 is there. Partnership firm, they can follow if they wanted, but I am just drawing it for this easy understanding. Consider, it is also balance sheet and equity share capital, paid up capital is there. They are written as 1000. Out of 1000, 900 issued for cash and 100 issued for consideration other than cash. Consideration other than cash. For example, I bought a machinery, I issued the shares instead of cash. Now, this schedule 3 says that whenever you issue any shares for a consideration other than cash, what you have to do? You have to write it as 1000 only, I have no problem. But in the notes to accounts, you have to disclose it as out of the total 1000 rupees of equity share capital, 100 rupees share capital is issued for a consideration other than cash. But you did not disclose it. Then, for presentation and disclosure, I will give one example, but I will do one more example. You know AS17? Segment reporting. What does segment reporting says that? Whenever there is a segment which is material, actual reportable segment. Whenever there is a reportable segment, what is a reportable segment? The 10% criteria, 10% of turnover, 10% of asset, 10% of profit, etc. You have to present it as a separate reportable segment. But there is something which is 20% of total company, but you did not report it as separate segment. In presentation also there is a misstatement. So whenever there is a difference between amount classification, present asset disclosure, ACPD of reported financial statements and ACPD of applicable financial reporting framework, that is called as misstatement. This is also important from understanding as well as examination point of view. This is misstatement. If you see what we were discussing, what is the objective of the auditor. Auditor's objective is to report on the financial statement telling that everything is free from material misstatement. What is material misstatement? We just now discussed misstatement. Misstatement means difference. Now consider, I am doing an audit of Reliance company. There, instead of writing 1 lakh crores rupees, they just written as 9,99,999.999. There is a difference of 1 rupee. I'm taking 1 rupee. Now, there is a difference in amount. You have to report it as 1 lakh crores, but you report it as 9.9999 something like that. Now, when you are appointed as an auditor, is it important for you to check the 1 rupee? Is it worth paying your attention? Then we call that as immaterial misstatement. There is a misstatement, but there is immaterial. Don't pay attention to those things. What is material? Consider instead of 1 lakh crores, they written as 90,000 crores. 10,000 crores is very, very material. Pay attention to those items. Sir, what is material? How do you decide? Material, simply if I want to highlight it, I tell it as which is significant in the understanding of the auditors or users of financial statement. Something which will influence my decision with respect to the forming an opinion is called as material. Very, very significant. Material part. So I should express an opinion stating that everything is free from material misstatement. Small mistakes you will ignore it. And whether they are prepared as per AF5 format, I have to check. Applicable financial reporting framework. Sir, what is applicable financial reporting framework? Applicable financial reporting framework simply says that what reporting is applicable for you. Sir, what does that mean? Sir, I am a company. How should I report? I should report as per what? I should prepare my financial statements and report as per Schedule 3 plus following the accounting standards. But if I am a State Bank of India, that is which company? Banking company, then I can't follow this thing. I have to go with some other thing which is Banking Regulation Act has prescribed some things. That is third schedule of Banking Regulation Act. Banking Regulation Act third schedule is there. There are two forms. Form A, which is for balance sheet format, and Form B, which is for P&L format. How do you have to prepare? It is not like Schedule 3 format, third schedule. Third schedule is different from schedule 3. Don't just replace it is not just interchange of words. That is as per the words used by Banking Regulation Act. This is as per Companies Act. Now there is something called as BESCOM, Bengaluru Electricity Supply Company. Now this is an electricity company. For this there is something called as Electricity Act. You have to follow that. There is something called as LIC company, which is insurance. For that there is an act called as IRDA. You have to follow that act for the purpose of reporting. What reporting is applicable for your company? As an auditor, you have to go and check that whether they are prepared as per the applicable financial reporting framework or not. Financial reporting framework is you should report your statements and information in some format. That format is prescribed by respective authorities, regulators. Whether it is prepared as per the regulatory body or not, you have to check it. That is second part. So, what type of reporting is available? For the purpose of understanding, we have given here applicable financial reporting framework. So, what is applicable financial reporting framework? Depending on the nature of the entity, I am not doing entire thing, and the objective of the financial statements. Why are you preparing the financial statements? The financial framework differs from company to company or entity to entity. That is known as applicable financial reporting framework. Or it is a set of rules and regulations that are to be followed for preparation or presentation of FS. For example, company schedule 3 and accounting standard as I given. You can write there for bank. They will calculate as Banking Regulation Act. Third schedule, Form A and Form B. This is for balance sheet and this is for P&L. You have to prepare that. So how do you tell that which framework is applicable for me? For the purpose of that, first of all we should understand how many types of financial statements are there. Financial statements are of two types. One is GPFA, General Purpose Financial Statement. Second one is Special Purpose Financial Statement. So what is General Purpose Financial Statements? The word itself says that general means any financial statements prepared by the company or any entity for the purpose of general users of everybody. It can be used by public, it can be used by government, it can be used by some other person. So any usage is common for everybody. That is called a general purpose financial statements. Example, schedule 3. So what is technical definition of GPFS? General purpose financial statements are those statements which are prepared using general purpose framework. General purpose framework. If we use the general purpose framework and prepare the financial statement, that is called a GPFS. So what is SPFS? Any statements which are prepared using special purpose framework. Framework is what? It decides the type of statements. So what is general purpose? Normal schedule 3. So what is special purpose? Special purpose means whenever, generally as per the fundamental accounting assumption, I will prepare my financial statements on a going concern, consistency and accrual basis. But I went to a bank for the purpose of loan, and in my financial statement there is a trade receivables, inventory, in transit, everything is there, which is worth 10,000 crores. I am asking, please give me some 5,000 crore rupees of loan. Then they asked, sir, this is yet to be received. I don't know whether it is due from 10 years, 15 years, I don't think. I want your financial statements to be prepared on a cash basis. The regulator or one of the users of the financial statements specifically asking to prepare the financial statements in some manner which is not useful for everybody in general. That is specifically used for a purpose. That is what we call as special purpose framework, which is NRV or cash basis is the framework, and that has to be prepared by company using the special framework. That is called a special purpose financial statement. Now comes general purpose framework. So what is general purpose framework? General purpose framework is of two types. One is fair presentation framework, second one is compliance framework. Fair presentation framework and compliance framework. If you prepare your financial statements, see I am consolidating, try to consolidate, observe here. Whenever we are doing the audit, we have to express an opinion telling that it is free from material misstatement. Second objective of the auditor is that I have to check whether that is prepared as per AFR, applicable financial reporting framework. So what reporting framework is applicable for you? It depends on what type of financial statements you prepare. Either you prepare the special purpose financial statements or you prepare the general purpose financial statements. Whenever special purpose financial statements are prepared, is it prepared as per the applicable required reporting from the respective entity or that has to be checked? When it comes to general purpose, we have to see that normal financial statements. General purpose financial statements means prepared as per general purpose framework. So what is general purpose framework? Two types of general frameworks are there: compliance and fair presentation framework. Sir, what is that compliance and fair presentation framework? We will again discuss these things in some other standard. But in simple terms, fair compliance framework means whatever the law says, you just follow it. Sir, I feel this is a suitable method, I should change it. No, don't change it. Sir, I think, don't think. I feel, don't feel. No, nothing, you have no value for anything. You just have to follow the instructions given by the respective standards or respective statutes. That is called as compliance framework. You can't deviate from anything. You can't deviate from anything. For example, you started adopting SLM method of depreciation in your financial statements. Preparation of financial statements, SLM method. What is SLM method? AS 10 says that you should charge the depreciation in the manner that is, future economic benefits are expected to flow. In the same manner, you should charge the depreciation. Earlier you thought it is SLM, but later you understood after 1 year, no, it is not happening the same way. It is happening on first year 10,000 units came, second year 15,000 units are there, third year only 40,000 units, then fourth year again it is going for 2 lakh. Then if I charge SLM method, then that is totally wrong, not as per AS 10. Then you wanted to change from SLM method to production of number of units of method. Then compliance framework, if you are following that, I don't care, just follow the SLM method. Don't deviate from any these things. But fair presentation framework is not like that. Fair presentation framework tells that you have to prepare as per the law. But whenever you feel, in whichever place it is there, if I present or deviate from somewhere and go to some other place, I can present it in a better manner. Then you can deviate for the purpose of better presentation. That framework is called as fair presentation framework. Fair presentation is like the compliance plus. So fair presentation framework means it is compliance plus deviation is allowed here. You should follow the law plus some deviation is allowed. Compliance means you just like to follow the law, don't deviate anywhere. So what is it? You are just talking about the company point of view. Yes, I am just talking from till now company point of view. Once you prepare from financial statements as per the applicable financial reporting framework, any applicable thing, maybe general, maybe special, maybe fair presentation, maybe compliance framework. Compliance or presentation. You have to, as an auditor, I should give my report using what wordings. That is what decides what presentation they are using. It is like if you use a fair presentation framework, whenever I am giving my audit report, I can use certain type of wordings. But if I am giving, if the company is already used compliance framework, while I am giving my audit report, I cannot use certain type of wordings. For example, the financial statements depicts the true and fair way of the affairs of the company. These wordings can be used only when it is fair presentation framework. If it is not a fair presentation framework, then I can't use the word true and fair. That is what it says. You see there. See, whatever it is there, it is just for understanding, better understanding. General purpose framework and special purpose framework. General purpose means a financial reporting framework designed to meet the common financial information needs of wide range of users. So, what do you mean by wide range of users? We will discuss it later. Who is the user of the financial statement? Later. Characteristics, that's okay. They follow the fundamental accounting assumption, that is going concern, approval and consistency. Then compliance with the gap. Accounting standards as per AFRF or annual preparation or periodical preparation, everything is given. So, the further financial reporting, that general purpose can be there, compliance framework or fair presentation framework. What is compliance framework? It tells that it refers to a framework where financial statements are prepared and presented in accordance with the requirements of such framework. Look at the language, final language, they tell it without any deviation. I don't want you to deviate from the requirements of the law. The words true and fair do not appear in the financial statements of this type of framework. This compliance framework is like a special purpose financial statements, because you can't deviate also. Whatever they ask, you have to prepare that. Sir, I can present it in a better manner. I don't care. Don't present it. Whatever I tell, just follow it. It is like the following the rules and regulations. What is fair presentation framework? Where they tell that it refers to fair framework, where financial statements are prepared and presented in accordance with the requirements of such framework. Such framework means compliance framework, and contains disclosures beyond the requirements of such framework. That means they can deviate also beyond that, or if they may deviate for the purpose of requirement of framework so as to achieve the fair presentation. Explicitly they can go out. And the words true and fair appears only in this type of framework. Compliance framework does not contain true and fair view. If this can be asked as an MCQ question. The words true and fair in the financial statements present in that type of framework. It is only in fair presentation framework, not in the compliance framework. Now I told users of the financial statements. Who are the users of financial statements? It is just given. Management also will use it for the purpose of decision making of the future evaluation. Proprietor or shareholders will also use it for the purpose of analyzing the financial position of the company. Should I invest in the company? Should I get out of the company? Then lenders also, bank, everybody will use it. How much should I give the loan or not? First of all, if I give the loan, how much amount of loan should I give? These people will use it for that purposes to know the financial position and strength of the company. Then suppliers to decide credit worthiness. Should I give the credit to the company or not? Because if the company financial statements are weak, if I give the credit, what about my money? That is interest. To decide that, they use the financial statements. Again, customers. See, why customers? They will decide whether it is eco-friendly, whether it is viably, are they using any harmful purposes. The government, for the purpose of mainly direct and indirect taxes, whatever the profit is there, and the profit only some percentage is levied as tax. Then research scholars for the purpose of study and etc. And employees for job security and bonus. What is job security? If I was an employee of a company where it does not have profit, no sales, then huge amount of cost, then do you think they keep it? Best example is many companies. They have Infosys, Wipro, Byju's. They laid off employees like anything. For the purpose of deciding job security, employees will see that. If they feel that no, there is no security of job, they will immediately trying to shift somewhere else. These are some users of the financial statement. Generally, they should not ask in the examination. Not much important. Then I told in the beginning, auditors' object is to report on the financial statements, whether they are prepared as per AFRF, according to AFRF, and whether they are free from material misstatement. For the purpose of that, I want to discuss here. Okay, what is the definition of audit? Independent examination of financial information of an entity, whether profit or revenue or legal form. They use the word legal form. What is legal form? For that they have given one thing. The legal forms are different types. I am just reading it. Proprietorship, partnership, LLP, society, company, EOP, BOI, any AJP, artificial juridical person. The definition of income tax is correct. That's it, almost. These are the legal thing. Now, so what is financial statements? SA 200, we are not discussing that. We will discuss in SA 200 only. As per Companies Act, we will see 5 elements combined together. We call it as financial statements: balance sheet, P&L account, cash flow, sources, statement of changes in equity, and explanatory notes. These 5 things. What are books of accounts? I am not reading entire thing. Any documents, if these are books of accounts, and includes records maintained in respect of all sums of money received and expended in company in matters. For example, they are trying to tell that any statement which are there to support P&L item elements. For example, I write sales 20 lakh rupees. How 20 lakh rupees sale? Sir, day 1 1,000, day 2 5,000, person A 10,000, person B 25,000. That means the total sales is dependent on some other activities or some other financial state records. Those records are called as books of accounts, supporting P&L items. Then comes sales and purchases. That means related to trading Any records or vouchers or books which are supporting the trading P&L, trading part of the P&L is called as books of accounts. Assets and liability supporting the balance sheet. Then items of cost, it is cost records. These are not important, that's why I done it in a lighter manner. Now there is one more definition called as auditor. Who is an auditor first of all? I tell that audit is done by auditor, I agree, but who is auditor? That means a single person will come and do the audit? No. Depending on the size, complexity, nature, extent, applicability, everything, the auditor should decide his team. The word auditor means he is the partner or engagement partner plus team. What team? You might have two paid assistants, you might have two chartered accountants and 3 senior article assistants, 2 junior article assistants, anybody, audit assistant, those people. Engagement team means auditor refers to person or persons conducting the audit, usually engagement partner and other members of engagement team or the firm. Engagement team means his partner, audit manager, paid assistant, senior article assistant, junior, any other designation. But they should be connected to the audit. See, for the purpose of helping me, see, as an auditor, engagement partner, I have a habit of drinking juice because doctor suggested that if you want to grow continuously, you have to drink ABC, apple, beetroot, and carrot juice 2 hours. But because I have the money, I appointed some helper. He is also coming with me wherever I go, bringing that ABC juice continuously to us. Can you call him as engagement party? No. Any party who is involved in doing the audit of company's engagement team. You may take your driver also. You can't tell the driver is an engagement team. Without driver, I can reach the engagement place? No. Bullshit. Don't bring the bullshit here. It's over. These are some important definitions. There is 2 more definitions. We will see that. 2 definitions are. One is fraud, then error. What is fraud? Fraud means, okay, before fraud we will discuss error. Error is see, when we discussed our regular class, we discussed this entire unit, only this fundamental units, almost for 3 hours. Almost for 3 hours, I still remember. Now we are completing in almost around 40 minutes. So there is always a difference between regular class and revision class. But revision class also we are covering entire thing. It is not like we are leaving out something, but there is a bit speed. So what is error? Error means it is an unintentional mistake. Instead of sending 1,000 to somebody, I sent 10,000. Yes, by mistake it happened. Instead of sending money to your account, I sent it to her account. 89700777. Instead of that, 67 I send it for 68. 7 and 8 it is beside of it. It happens. Mistake. It is an unintentional one. So a term error refers to unintentional mistakes in the financial statement, such as clerical error, commission, omission, duplication, compensating error, etc. And misapplication of accounting policies are also called as error of principle. Principle means base only you are misapplied it. So there are 2 types of errors from audit point of view, not from accountancy point of view. Because we are auditors, we should check whether it is materially misstated, either due to fraud or due to error. I don't care, but is it materially misstated or not? What are the types of errors? One is self-revealing errors. Second one is non-self-revealing errors. Self-revealing errors are those errors which are visible on the financial statement space itself. You don't need to do some extra work to find out those errors. Self-revealing, other part is other. For example, there is a sales of 10,000 into 10 vouchers, 1 lakh. But in the sales P&L account, it is showing it as 10 lakh. That means there is immediately visible there self-revealing errors. Yes, 10 lakh and 1 lakh, there is a difference. By mistake it happened, they added 1 more. Second one is Non-self-revealing errors. That means they are not visible. You have to perform some additional audit procedures to identify that errors. For example, bank reconciliation statement. You have to go through every transaction. Then only you will find out whether there is an error or not. So, except that is called as error. Then comes fraud. Exactly opposite to error is fraud. Fraud is an intentional act, not mistake, intentional act done by any party on the company is called as a fraud. Why? For the purpose of getting some extra advantage, undue advantage. An intentional act by one or more individuals among the management, TCWG, employees, third parties, involving the use of deception to obtain an unjust or illegal advantage. I will try to sell the commodity which is worth 100 rupees for 50 rupees and I collect 30 rupees bribe later point of time. That means you are using your designation to take undue advantage, illegal advantage. That is not right. Are you doing intentionally? Yes, because you know that you should not do it, but you are doing it. That is why it is fraud. When I say fraud, fraud can be of two types. One is fraudulent financial reporting. We call it as FFR, fraudulent financial reporting. Second one is misappropriation of assets. Fraudulent financial reporting means what? Either over statement of financial statement, P&L, balance sheet, everything, cash flow statement, or understatement. Financial state reporting means accounts of the company are misstated. Fraudulent. Misappropriation of asset means you are an employee of a company, you stole one pencil, one rubber, one eraser, same, a sharpener, or while going home, what is okay. There is something called as you should use the diary which is given by the company only for company purpose. But you took 10 diaries and went. It is misappropriation of asset. Knowingly you are doing that. But that is having other than financial impact on the financial statement. That is why misapplication of assets, misappropriation of assets. FFR means intentional misstatements, including omission, amounts, disclosures in financial statements to deceive financial statement users. Either overstatement or understatement of performance or position. Mainly this is. Misappropriation of asset means involves theft of any entity's assets is oftenly perpetrated by employees in the relatively small and immaterial amounts. 10 rupees, 100 rupees, 1000 rupees, where nobody notices such amount, very negligible amount, they try to do it. Also it involves misuse of resources. I am a company employee, I have given vehicle to bring the materials from one godown to other godown. But I am using that for taking my girlfriend out on a date. Are you financially affecting? No. I am using the misusing the assets of the company, resources of the company. That is what fraudulent, misappropriation of assets. Fraud is of two types: fraudulent financial reporting, misappropriation of assets. These are the things which are there for the purpose of fundamental part. You pause the video for 2 minutes, go through entire thing. If you get any doubts, go back and watch it. We will continue to the first chapter. So we will continue our discussion. So we will discuss regarding nature, objective and scope of audit. Sir, you told audit is an independent examination of financial information, everything, etc., etc. What is the nature of audit? What is the objective of audit? What is the scope of audit? We have to discuss all those things here. That is, all these things are mainly discussed in a standard called as essay 200. Overall objectives of an independent auditor and conduct of audit in accordance with standards on auditing. You have to check these two things as whether auditor is complying with those things or not. Before that, we already discussed what is the objective of audit. Objective of audit is to express an opinion on the financial statements, report on the financial statements, whether they are free from MMS, material misstatements, and they are prepared as per applicable financial reporting framework or not. So, going by the thing, I am not discussing everything, whatever it is there repeated, I will just keep it by reading. So, introduction is not important, meaning we already discussed that, you can go through this. Now, I just wanted to highlight that. You told that, sir, it is an independent examination. What is independence? They told the definition. Independence here means judgment of a person is not subordinate to the wishes or directions of another person who might have engaged it. For example, if I am appointed by some company, whatever I verified in the financial statements, opinion on the financial statement should be from me only. Like whatever I have understood, based on that I should express an opinion. It is not like because company management is telling that sir, we will give 10 lakh rupees, you please give this opinion. No. Independence means not getting into that part. Independence simply means using your own judgment to give the opinion. You should not use the judgment of somebody else. Your judgment is not subordinate. Subordinate means there is some boss on top of you. No. You are the boss. That's what I am trying to tell. Your judgment is not subordinate to the wills and wishes of some other party who has engaged you. Don't compromise for money, don't compromise for assignment, don't compromise for other assignments. No, don't go there. You just think be in the present. Present means whatever is there now, you just talk about it. Next assignment comes, you talk about the next assignment. Next assignment comes, then see it as this thing. And while doing the audit, I as an auditor have to see that FS would not mislead anybody. How do I ensure that? By checking whether the accounts have been drawn up with reference to the entries in the books of accounts or not. That means whatever the books of accounts are there, thus using the same things only financial statements are prepared or not. Again, entries in the books of accounts are supported by vouchers, sufficient and appropriate audit evidence. I am telling I sold goods to Ram, 10,000 rupees. Where is the sales invoice? Sales invoice has to be there supporting thing. Then none of the entries have been omitted in the process of compilation. Compilation means what? Merging. You have sales entry, purchase entry, everything. While you want to compile and prepare one financial statements, you should not miss out any entries. You have to check it as auditor whether it is checked or missed out or not. And whatever the information that is conveyed, that should be very, very clear as well as unambiguous. What do you mean by this? For example, sales is 20 lakh rupees. If I write this thing, that's over. It is very clear. I did a sale of 20 lakh rupees. That is what it conveys. If they start writing like, I think my sales is 20 lakh, no, you can't use those words. It should be very, very clear and unambiguous. Unambiguous means it should not be confusing. Ambiguous means confusion. This is without confusion. Unambiguous means without confusion. Clear. And all the financial statements, accounts are properly classified, described, and disclosed. You remember the misstatement example? Same examples are applicable here. And all the statement of accounts should present a true and fair picture of the operational results and the assets of the liabilities. Everything has to be done. Then you can read this. I will give it as homework. See, audit is not an independent thing. Audit is connected with so many things. Because I am telling, I am going to do the audit of financial statements. Sir, did the standards of auditing telling that financial statements should be prepared in a what manner? No. Standards of audits are telling that you have to audit as per this manner. Of which financial statements prepared as per the Companies Act 2013 for a company. That means audit is also connected to the company. Appointment of auditor is also connected to the company. Section 139 of Companies Act. There are so many other interrelated aspects. Maybe law, maybe economics, maybe behavioral science, maybe science and mathematics, again production, financial, everything it is connected. It is not an independent or discrete thing. Then comes engagement. What is engagement? The exchanging of ring, garlands. No, not that engagement. Engagement means it is an agreement between two people to do something, not what you think. To do something which is formal. I am responsible for what I say, not what you think. Engagement means an arrangement to do something. You can write this professionally. I can't believe you people. In the context of auditing, it means formal agreement between auditor as well as client, under which auditor agrees to provide some services, audit services, and when you do that, it takes a shape of engagement letter. What is that engagement letter? We will discuss in essay 210. See, if you are having R material, you can use it for the purpose of looking into it. If not, you can use any ICA material or any other faculty material also, because it is same content. Whatever the material we have, that is also copy paste from ICA, or anybody is preparing, that also has to be copy pasted from ICA. They can't use their own judgment in this. Now we will see the 200. So remembering name is very important. You should not compromise on that. SA 200 says that overall objectives of an independent auditor and the conduct of an audit in accordance with standards of auditing. Standards of auditing. What is the overall objective of auditor? We already discussed that. See there. You should obtain the reasonable assurance. The word extra is here is reasonable assurance. So what is the reasonable assurance? Whenever you see the financial statements, you should convince yourself at least reasonably, may not be 100%, at least reasonably. So what is reasonably? It is like high level of assurance. High level of assurance, but not absolute. Absolute means 100%, but not 100%. It is high level. Yes, 70, 80, 85, 90, 95, not 100. Why? Because of inherent limitations which we are going to discuss at a further point of time. To obtain the reasonable assurance about whether FS as a whole are free from MMS, whether due to fraud or error, thereby it will enable the auditor to express an opinion whether the financial statements are prepared in all material respects in accordance with the AFRF. If you recollect the definitions which we discussed, isn't it the same thing? The wordings are rearranged. All these things we already discussed: fraud, error, material misstatement aspects, financial reporting framework in the fundamental. That is why I call it is very, very important, like the heart of the audit. And second objective of it is, once you obtain the reasonable assurance, you should report on the financial statements and that should be communicated as per essay. That means what is report? That is given in the expression of opinion, that is called as and in accordance with essay, generally they told it in essay 700 series. Essay 700 series. We have to report as per essay 700 series. 700, 701, 5, 6, 10, etc. Reporting what is meaning there in 700 series. See, this can also be asked for 4 marks question. What is the overall scope of audit? What you have to cover as an auditor? Scope means what is your boundary, where you should not go beyond and where you should not come within also. You have to cover all those things. You should cover all aspects of the entity relevant to the FS being audited. Whatever the financial statements you are auditing. For example, if you are auditing 2025 and 26 financial statements, you should cover all the financial information covering those financial statements. For example, sales register of 2025-26, purchase register, asset register, physical verification, again liability, equity, then rent, interest, etc. Everything you have to cover with respect to financial statements. So, company is doing some extra pollution. Is it related to financial statements? No, don't go there. That is outside of your scope. What is within your scope? You just stick to that. Then you should also get the reliability and sufficiency of the financial information. See, you should express your opinion based on the sufficient and appropriate audit evidence. So, what is that? They are telling reliability and sufficiency. Reliability means what? Quality of audit evidence you obtain. I am talking about appropriate. Is it appropriate? Is it relevant? Actually, is it reliable? While you are doing the audit of sales, you can't use the purchases register because that is not relevant. That is not reliable. When I say reliability, I can use it in other manner also. What is that other manner? Whenever you are doing the audit of sales, they are giving the sales register only. But that sales register is continuously modified by the entity without mentioning the what was the earlier thing, what was the new thing, is it reliable, is it fake, all those things. And sufficiency is a matter of quantity. Quantity means whatever the evidence you have obtained, is it sufficient for you to express the opinion? Quality of evidence and quantity of evidence, both the things have to be considered. And you should even check whether the proper disclosures of the financial information is made. For example, the misstatements, I give an example for disclosure. Shares issued for consideration other than cash, are those disclosures are made? And you should express an opinion on the financial statements. This is how you have to do all these things. Cover all the aspects of the entity, financial statements being audited, liability and sufficiency, proper disclosures of the financial statements, and expression of opinion. But you are not required to do, prepare and present the financial statements. See, you are a person to check it, not make it. You should verify the financial statements but not prepare the financial statements. Why? Because of the maker and checker concept. If you prepare and if you verify, you might not find out the mistakes. Because how can you find out mistakes on your own prepared financial statement? That is not possible. That is why you should not do that. And even this is section 144 services. 144 as per Companies Act tells that it is prohibited services. You can't render these services if you are audit of the company. Then you can't do the duties outside the scope of competence of auditor. If the board of director, consider managing partner tells that, so I have sent my son to the school. While you are coming back, you can just pick him up. No, you can't accept it. Expertise in authentication of documents. See, I am an auditor to check information statement whether it is matching or not. I am not an investigator to check the documents given to me are genuine or fake. After there are some other people, investigators. So I am not a person who is having expertise in authentication. Authentication means verification or genuineness. Verifying the genuineness of the documents is not my duty. And audit is it is not an investigation. It's just what getting the information for the purpose of expression of an opinion. Overall scope of audit. If the examination asks this question, independent auditor has certain objectives. Scope of audit. What does scope covers and what it does not cover? 4 points covering, 4 points not covering. Financial statements verifying, then liability and sufficiency, disclosures, and expression of an opinion. But does not include preparation of financial statements. Duties outside the scope of competence, in expertise, in authentication, and investigation. These are things not there for audit. Then comes, see, whenever we discussed the auditor's definition, auditor, to obtain the reasonable assurance. That means I should obtain the assurance, based on that I should give the report to you. I am telling reasonable assurance. That means high level but not 100%. Absolute. Why? Because of these factors. I can't get the entire evidence, 100% evidence because of these factors. One is, we call it as inherent limitations of an audit. What is inherent limitation? They are anyway there. You can't take out those limitations. For example, if I tell, whenever I am transporting oil from one place to another place, petrol, in the petrol tank, if I load 100 liters here, and I go to the destination, it will not be 100 liters. Because the nature of the oil is such that it will even evaporate for the heat, for the air, something like that. That is what we call it as inherent limitation. Whatever the precaution you take, you can't protect it. Sir, I will put it in a freezer, all those things, but at what cost? That is not there. You should have to just accept some risk. So, what are the inherent limitations? This can also be asked for 4 marks question or 5 marks question. Inherent limitations of audit. The first inherent limitation is the language is the auditor is not expected to and cannot reduce the audit risk to 0. First of all, it is not possible, and nobody is expecting the auditor. Why? Because there are some inherent limitations of an audit. So, what are those limitations? First one is nature of financial reporting. What is nature of financial reporting? Whenever the management is preparing the financial statements, they make numerous judgments. My assets life is 20 years. So what is the proof? It is just a judgment. There is no specific proof that I feel, yes, life is 20 years. But what if some new technology comes, this becomes outdated? There is always a possibility. That is why reason where we can't tell that whatever it is stated in the financial statements. For example, 1 lakh is a machinery, 20 years is the life. They charge 5,000 depreciation for the current year. 5,000 depreciation is correct. I can't tell 100%. because the depreciation is based on some judgment. The same way, there are so many items in the financial statements which are based on the judgment. That is why nature of the financial reporting, I can't express an absolute opinion, 100% opinion. That is why we go for reasonable assurance. First category, first reason is nature of financial reporting. First inherent limitation. Second inherent limitation is nature of audit procedure. What is nature of audit procedure? Whatever we do the audit, whenever we do the audit, we are not having sufficient time and we are not paid sufficiently to check each and every transaction. For example, if you go to any Reliance Mart or Reliance that vegetables, grocery, everything is like D-Mart or like that thing, there are on a daily basis on a weekends, they have some 5,000 transactions. On a week basis, it is maybe some 2-3,000 transactions. If you just multiply on an average of 15,000 per week, multiply by 52 weeks, that means almost some 50 lakh, 60 lakh transactions, 75 lakh, 78 lakh. That is for one branch. Consider you are auditing the Reliance Mart, which is having 150 branches all over the India. 78 lakh multiplied by 200, 300 branch, 400 branch, not possible at all. And somebody has got 10 rupees peppermint. No, you can't sit and verify all those things. That is why we have something called as sampling basis. We go for sampling. And there is sometimes what happens is management try to do fraud intentionally without by covering all those things. Best example is CA Veeraj, certain computers. None of the auditor would be able to find out. In the regular class, I think I have given an example of Nirav Modi, Punjab National Bank. Swift route that is totally misused. So, first one is nature of financial reporting. Second one is audit procedures. There are practical and legal limitations on auditor's ability to obtain evidence such as possibility that management and other parties may not provide intentionally or unintentionally complete information relevant to preparation and presentation of financial statement. They try to hide some information. And fraud may involve sophisticated and careful organized schemes. If it is error, I can easily find it out. Because that is, the other party also does not know there is a mistake. But when it is fraud, other party specifically did it, so you try to cover up all those things. Third one is, audit is not an investigation, audit is just a verification. When some employee tells that I don't give the information, you can't hold his collar and beat him up. You are just what? Watchdog, not a bloodhound. You can't go on what? Investigating. Why you are not doing? Come to my cabin. I will look into you. Kaikal Kataki like shock treatment on the sense. Third degree, aeroplane episode. So all those things you can't do it because you are just an auditor. Just an auditor. It is not an official investigation of alleged wrongdoings. For that, there are some other people also. We are discussing inherent limitation, nature of financial reporting, nature of audit procedures being performed. Third one is nature of, it is not a nature of investigation. Then timeliness of financial reporting and decrease in relevance of information over time. That means whenever the financial statements are prepared and audit is conducted, there is a timeline gap because of the presence of numerous transactions. We can't even verify that also. So there is always auditor has to check balance to be struck between reliability of information and its cost. They gave some information, financial statements, information, books of accounts. Should I trust it or not? No, you felt no. I go for some detective to find out whether there is a genuine transaction or not. Spy, I will appoint some spy. At what cost? Anyway, you are getting some peanuts from the company. From the peanut, if you pay half peanut to this person only, investigator or detective, then what the hell you are doing? No. You should always try to balance it. That is the reason you can't verify everything, authenticity of all those things. That is why you have to do that. Timeliness of financial reporting. Last one is future events. What is future events? There could be some events which will adversely affect the ability of an entity, whether to continue as a going concern or not, or its business. It is also this thing. What is it? inherent limit. Then we have 2-3 more concepts which is important from examination angle. They might ask this benefits for 4 marks. Why somebody should do the audit? I agree, for some companies it is, for some entities it is mandatory, but all entities it is not mandatory. Why we have to do that? What are the benefits of doing the audit? They tell that the moment it is audited, first of all, we chartered accountants are independent parties. As the Prime Minister also rightly said that signature of the auditor, chartered accountant, is more powerful than the signature of the Prime Minister. That means whatever the signature we put on the financial statement, that we give high quality information to the users. Users tend to believe whether it is very authentic. Then it will safeguard the interest of the shareholders also, because at least they know that whether the company is going concern or not, or my companies are going to shut down, my company is already gone. Then it acts even as a moral check on the employees also. What is moral check on the employees? When you know that somebody is going to check it, you will be as honest as possible. Then it will help the government authorities for the tax liability. What is tax liability? Whenever the company does some sales, generates some profit, they should pay the tax. Whether the tax they are paid is correct or not depends on the profit. Whether profit is correct or not, auditor should tell that. Yes, financial statements is true and fair, everything is correct. Then auditor financial also can be relied by lenders, bankers for making their decisions whether to give the loan or not, how much loan. It may also detect the fraud or error, or sometimes both also, because we are trying to check the financial statements of everything. Then audit reviews the existence and operations of the various controls, whether the internal controls are operating effectively or not. All those things can be checked during the audit. Then MCQ can ask whether audit is mandatory or voluntary. If it is required by law, mandatory. If it is not required by law, it is voluntary. So appoint the auditor. Auditor is generally appointed by shareholders. In case of normal company, in case of government company, CA will appoint. In case of other entities, generally owners of the entity will appoint them. There is an MCQ. Sorry, case study. We have to go and solve it. It is not in page number 1.19. What is the page number? 1.19. 1.19. Correct, right? No, it is there. That's right. Then there is something called assurance engagement. What is assurance engagement? It is a type of engagement, formal agreement between the auditor and the client to give some assurance. What assurance? Reasonable assurance. If you are appointed to do the work without giving an assurance, that is not called as assurance engagement. If you are appointed to give your opinion, that is called as assurance engagement. Here the word they used as practitioner. It is not a chartered accountant. Chartered accountant in practice specifically. Express a conclusion designed to enhance the degree of confidence in the intended users, etc. And they can ask this. An assurance engagement is always a three-party relationship. Why it is three-party relationship? I am the auditor, I am appointed by the shareholders, and I am doing the audit of company. There is a tripartite relationship. Auditor, client means company and the shareholders. And there should be some appropriate subject matter. Example, financial statements of the company. That is what I am verifying. Suitable criteria. How do you do the audit? Based on standards and auditing, based on the relevant statutes. And you should get the sufficient and appropriate audit evidence. Then only you can express an opinion. What is sufficient? Sufficient means quantity, appropriate means quality. They might ask this as an MCQ point. MCQ. Then written assurance report has to be given. It is not like oral, you have to give report in the written format. Now there are two types of assurance engagement, not two, actually three. But the important things are two things. One is audit, second one is review. So what is audit? Whatever we discussed below is called as audit. Reasonable assurance on the financial statements, whether they are free from material misstatement, everything has to be conducted. That's what audit. Reasonable assurance has to be given. But the review means we just give the limited assurance engagement. What is limited? Limited means which is less than reasonable assurance. If I tell reasonable assurance is 80% assurance, limited review means limited assurance is maybe some 50, some 60% assurance, because I am verifying part of the financial statements. Either I am verifying just the P&L, or 6 months balance sheet P&L, or maybe second 6 months, or I'll be with 3 months, something like that. Because of which I do this. Limited assurance generally happens on, you know that interim financial statements, quarterly financial statements, on which we do the review because they are not full financial year. Third one is examination of prospective financial information. Whenever you go to a bank for the purpose of obtaining a loan, bank manager will ask that get some projections which is signed by chartered accountant. And that also can you give the assurance? You can't give the assurance, but you can sign it, stating that anything which is prepared is as per the information given by the client. I do not express any opinion on the. I do not vouch for accuracy of the numbers. That may come true, may not come true. I am not responsible. I am just telling that based on the data given by them, I prepared it and I give it to him. That's it. 3 types of assurance engagement: audit, review, and prospective financial information, like forecast, for example. You read it, there is a difference between reasonable and limited assurance. Review and audit, just now we discussed. They might ask qualities of auditor, very rare. We will discuss these things again in ethics chapter. Auditor should be tact, caution, firmness, good temper, integrity, judgment, patience, clear-headedness, discretion, etc. We will see that in the respective chapter. And when the ICA has issued the standards, for our syllabus we have only standards on auditing. But the total standards which are issued by ICA are called as engagement and quality control standards. What is engagement standard? There are 4 types of engagement standards. What is quality control standard? There is only one quality control standard, SQC1. So quality control standards is only SQC1. Engagement standards are of 4 types. So what are those 4 types? Here only it is given. One is standards on auditing, 200 to 800 series. Then standards on review engagement. Then standards on assurance engagement. Then standards on related services. These are the 4 types of engagement standards. Why standards are needed? Simply we can write become answer or POC answer to maintain the uniformity. Consistency should be there. And the users will get the right idea when they see first item, second item, third item, fourth item, what is there in that item report. To maintain all those things are there. Like establishing the benchmark which are part the global practices. It improves the quality of financial reporting, etc. Promotes the uniformity. Whatever I highlight, you just write. They generally don't ask this. This is very, very basic level question. It will equip the professionals with knowledge as well as skill, etc. There is one more case study that is in page number 1.31. 1.33. It is in 1.33. You do that case study also, by which we complete fundamentals as well as NOS audit, nature, objective and scope of audit. So you do revise. That's it. Do revise this, pause the video and do revise. We will in the next coming video we will begin with audit report part. So